Well, good to see you, man. Thanks for joining us. Chris Black, everybody. I will let you give a little intro on yourself, on Threadbank, on all the cool things that you guys are up to.
I'll tell you what, hang on here. Okay, so
Uh-oh.
I'm hanging out with Chris one night, uh, and he told me this awesome story of kind of how he got from where he started to where he is. Got to tell that story, man.
We'll try not to do the long version. People tend to fall asleep with that one, but no, appreciate you guys for sure giving us the chance to tell a bit of our story, getting to know you. Yeah, I think it's really interesting where you guys have come from, the approach that you've taken, and I think kind of like us that we're looking to be a major part of the solution going forward, not a part of the problem. And I think that's a motivation for us. And so with Threadbank, which was basically led by investor group, a blend of bank private equity investors, of fintech venture capital folks who were all operators in the past, and then a mix of individual investors that were all friends or in our network, or maybe most importantly shared the vision of what we wanted to be and what impact we thought we could have. And so that's really where we've approached this entire thing from the beginning. We recapitalized a little bank in East Tennessee in May of 2021. Brought about 50 million in capital. We brought another 25 million in capital last March, right after SVB. So that wasn't the most fun thing that I've ever done in my life, but we got it done, and it's a tribute to our investors and our team really. But this is we sought to be a very forward-thinking community bank who understands how to deploy technology and embed technology into platforms that are Main Street economy, whether they're representing attorneys or doctors or mom and pop trucking companies or general small business or various consumer approaches. But we look at it that it's just Main Street banking, and it's approaching, instead of everything being in a bricks and mortar branch, they're going to be in virtual branches of Thread, where we apply the same thought process, the same construct, whether you're thinking about from a risk management or an operational or a liquidity point of view, because we're just a bank at the end of the day. And that's what we want to be, is a bank for today, for tomorrow. So we've got a foundational saying about that banking is and always will be about deposits, loans, capital, and liquidity. Then we've added payments onto it because it used to be, and we're bringing that back because it should be. And then I'd say also, some software down the road. And that's really what the connectivity to other banks is for us, and what the baseline motivation extends beyond our desire and need to create a good return on investment for our shareholders, but also how can we show other banks the way? Perhaps we'll probably take a lot of arrows in doing that. Anyone who is kind of on the leading edge of doing things traditionally has done that, but that's our intention, is to
Hang
do.
on, taking the arrows, you mean?
Unfortunately, I think that's.
Yeah, I understand. I can see
Yeah.
some bullet holes right here. Yeah.
Yeah, exactly. It's just a way of life, I think. But nothing ventured, nothing gained type of mentality for us. But we think in so doing, we can really show other bankers and other community banks how they can find additional sources of revenue, additional opportunities to leverage some type of skill or some type of expertise they might have. So I went roundabout. You asked how, the story. I guess you're referring to kind of my winding course to get to banking.
Right.
Yeah, I had to be careful with this because I can go on about it, but so all I ever wanted to do was fly airplanes in the Air Force from when I was a little kid, and so I was fortunate enough to be able to go to college and do ROTC and have the Air Force pay for the better part of my education. And so I spent about 9.5 years after undergrad in the Air Force flying airplanes. And one of the things I learned during that time was, and this isn't a shot against the Navy, although I do it often, is you want to be, your chance for career success tends to be higher. Anyone's chance tends to be higher the closer you are to the central mission of the organization where you are. So I learned that in the Air Force. So Air Force traditionally has been run by pilots. Seems like that's their primary mission. That's what I want to do. I want to get as close to their primary mission as I could. So I learned that early, post Air Force and business school, made my way to New York, covering at Merrill Lynch, covering large cap banks as a research analyst before the crisis, great financial crisis, during it and after. And I was at Merrill, and we were part of the major part of the crisis. And I was covering a multitude of banks who ended up failing, were acquired, or now, all the too big to fail banks. So, further learned a lot about markets, about banks, about economics, about crashes and failures, leverage, all these things. Kind of circuitously made my way through managing investments in the hedge fund world, and then was fortunate back years ago to get drafted and pulled into a bank, which is now a thriving community bank here in the Nashville area, headquartered in Nashville, called First Bank, which is now about a $13 billion bank. And as they were looking to go public, and so I found my way into community banking kind of through these channels. Chris Holmes, who's still the CEO there, is a good friend and a mentor, took a chance on me with this kind of diverse background. And so while there, we were able to build upon what they had done and strengthen community bank. They had a lot of desire to do things digitally and be digitally forward. And things kind of wind around, and as careers go, and I find myself here doing this and what we're doing now, partnering with First Bank and giving them advice, them giving us advice, and how do we work together. And so it's just a great kind of example, I guess, Dave, of how we think this should be done, that the pie is so large, and the big banks and others have taken so much of the pie from community banks that we should be working together. We should be working with regulators, all these things. We should be working with all of our technology partners to figure out how to fight back, how to take back so much of this business, which was created by banks, by community banks. By definition, kind of all banks that start are community banks, and then they grow up and kind of forget sometimes where they came from. And that's really what our mission is. And so we approach
helping bankers, right?
There you go, bankers helping bankers, almost like it was an ad for you. Yeah.
Hey, real quick, man. So I love what you're talking about, the idea of being closest to the mission of the organization, right? And that theme there. As you guys look at, obviously, lots and lots that you're doing, BaaS, embedded finance, we could call it complicated commercial banking, right? But in partnering with other institutions, that whole theme there. If you kind of look at that, I thought when you said it, it was like a light bulb for me, because trying to be closer to the mission of our commercial clients would be not just providing the basics that we've always done, but things like helping them provide for their clients, right? And that seems, if you look at BaaS and embedded finance, it's kind of that furtherment chunk, right? So you want to kind of talk about just your view, and I think too a lot about, great conversations with Joe Maxwell and all the things that you guys have been able to do. And I think y'all have such a similar vision, but what is the vision that you guys see for the space, and how is it evolving in these crazy times?
Yeah, no, I appreciate the question. And Joe Maxwell is the chairman of Thread, for those who might not know that. So we are locked at the hip on this, and hopefully our vision is really aligned. And when it's not, we work on it. But I think what you said, Tanner, is exactly, how we're approaching this. That again, banking is pretty simple at the end of the day. It's complex in all of its forms and risks and leverage and relationships, but it's deposits, it's loans, it's capital, it's liquidity, it's payments. And the pain point that we've seen, if I could draw, a graph, on the vertical axis would be customer expectations or consumer expectations, and along the horizontal axis would be time. And go back pre-financial crisis, during, and then to today, right? Amazon et al. have taken over time customer expectations up and to the right exponentially. You went through a long period of time of the big banks, especially because they have the capital, of repairing their own balance sheets, trying to save their businesses, figure out what digital meant, all those things. And so there was a flat line there for quite a while, right? And while the widening of that gap between Amazon, which is what people in our country have come to expect, I'm going to go on this app, I'm going to ask for this, or I'm going to buy this, and it's going to be delivered to my address on this day. It's going to cost me this much. and they're going to send me a picture of my package sitting on my porch and I'm good. No one really cares about all the myriad of, connectivity and different channels and how that package got there, but they had that expectation. So that gulf really widened, during, call it 2008 to 2016, 17, 18. The big banks began to really deploy and figure it out and have, like I said, incredible capital. And so they've started to really shrink some of that gap and move up in terms of consumer expectations. But down in the void are the community banks. And all of those customers that are suited and want to be working with community banks are kind of orphaned, right? They're too small for the big banks, whether they're regional or the too big to fails. They're orphaned. And so community banks have their customers sitting here wondering, right, who's going to take care of me? Who's going to serve my needs? And their needs extend way beyond the plain vanilla checking account and a debit card that, right, works on some old legacy core. Sorry to those guys, but it's not working for community banks, and the cost structure certainly is not working. So something has to fill that void to meet consumer expectations where they are, or all of those banks are going to go to the dustbin of history like everything else that hasn't met needs, right? Supply and demand. It's very simple economics. And so our supposition from the very beginning, before we had identified a bank that we were going to partner with, our investor, Joe and me and our group, amazing team, amazing directors, amazing investor. We're very blessed people. And we've got a shared vision that we want to just take those banking products and take them to where the consumers and the customers are. It's a simple proposition. They happen to live inside of their accounting systems or their ERPs or their workflow, depending upon the industry and what the need is. And so, these highly innovative software companies who've grown out of, again, supply and demand, meeting the needs, not encumbered by a bunch of legacy, in many cases, a lot of legacy infrastructure, a la community banking is encumbered by legacy infrastructure. So you have to find a way to connect into where those customers are because they're not in the bank branch anymore, right? It's always been about banking, the bank. It was about, I guess, going to the stagecoach of the bank. And then it was about going to the bank branch and then the bank's ATM and the bank's website. Well, we're saying that was all great. And that's a great linear progression. Banks have to go where the customers are. It's just not more complicated than that. And so we've shown and have learned a lot that if we bring the banking tools, and they don't have to be overly complex, and we put them into where our partners are, we've got some partners who are, multi-billion-dollar market cap public companies who were taking simple banking tools and plugging them in for their small business customers to access inside of their ERP. So no longer do they have to get out of their accounting system and go log into their bank and not have tools that work and they're not integrated and it's a spreadsheet mess, or they're wiring, they're ACHing, whatever. We shrink that down and bring that into where they do their business and create tremendous efficiencies. That's one example. Another is with so we have a partner who has very, very, very substantial balance sheet. They've got hundreds, if not more than hundreds of small family operated trucking companies. Think of a mom and pop trucking operator with a couple of rigs, maybe 25 rigs, maybe 80 rigs. Again, they are orphaned by the big banks. It's just not big enough for them to deal with. The regional banks may not understand. Community banks in their community, while they would love to, right, have them or keep them as customers, they can only do the baseline, and they're not serving their needs. And it causes a lot of friction and a lot of business problems. So our partner, we plug in banking products to them, and it breaks down. And it's kind of the last mile for them of really, really upgrading their operating leverage capabilities, right? All of their operating capabilities, efficiencies, whether it's planning for fleet management, fuel management, human resource management, whatever the case might be. So the natural, obvious thing is we'll just plug their banking in to that. And if you ask them what is the thing that is the most painful in their business, the vast majority will say dealing with my bank. And so we look at this, we're not geniuses. I mean, it's just filling needs, right? It's supply and demand. and listening and being willing to challenge paradigms, so long as you have established that those core banking fundamental principles, deposits, capital, loans, liquidity, I keep saying it over and over and over. You meet those needs and the risk management, there's just such tremendous upside. And so as we demonstrate that, fast forward down the road, and we can talk about the regulatory environment for sure. It's obviously a very critical and looming, I call it Cat 5 hurricane, that's kind of looming over the entire industry, whether you're a traditional community bank or you're someone like us who is leaning into embedded finance and embedded banking. It's really coloring all of this. But that's all we're doing, right? The things that should weather that storm, no matter the environment, that's what we do. And that's what other banks should be doing. And they should be thinking about how do they find, let's say they're an agriculturally focused bank, or maybe they're here in Nashville and they focus on the music industry or commercial real estate, or pick any myriad of specialties that many banks have. If I'm them, I would be looking for, are there technology partners out there who specialize in those types of things where we can bring our demonstrated banking knowledge and plug them into those technologies and now not be encumbered by geography, which is kind of arcane concept in 2024, but it's a paradigm that's holding everyone back and down, right? How can we take what we're really good at and extend that out to different geographies? And we're going to have to figure out risk management. We're going to have to figure out third-party risk management and how regulators think about these things and where we need to invest, et cetera. But that's all we're doing. We're just doing it as a primary function, right? Because I want to be, what we do is going to be the mission of the bank is going to be exactly what our primary businesses are by definition. And so that's the only thing we're doing differently, is it's our primary dedication.
I love it. Man.
Yeah, you take Dad, real quick, if you think about, a lot of what he said there, the concept is basically everything we've always done. But if you think about sort of the vendor service provider to banks that offers these products, right? The service that we all thought about is so that the bank can provide the service. And I think what you're really talking about is, how do I help my customers or partners, or maybe we call them fintechs or brands or all these other names, right? But how do I help them and think about my productization so that I can help them deliver what they need to deliver and what they need to accomplish, right? That's the big mindset shift. And maybe we're focusing our products one click deeper in the hierarchy, but otherwise, this isn't some radically new concept, but it is an important difference, right?
No doubt about it.
What were you going to say, Dad? Go ahead.
Well, just all of this. I mean, when eBay shows up, and then we have the conversation about Amazon, and it's like one step further, right? But there's these iterations of things that, let's just say, a minor change along the way, and we end up with Strider. We end up with Marqeta or Galileo. It's all of a sudden we're exposing this in a different way to kind of step in somewhere between a processor and a gateway in a weird way, and everything had to be done in the old days kind of core down, and so it was an API issue or a connectivity issue. And now everybody's discovered the world of APIs. I mean, even ISOs used to be the only way to connect to, Visa and things like that. And so all these little companies have come along, and in this digital transformation that we've all gone through, now we've introduced, this extension of banking services to companies that go directly to the public, right? And in those companies having that extensibility of banking services, it doesn't make them a banker. And so maybe they've got connectivity to an API where they can get served up a banking function, but at the same time, maybe they don't, they blow it on a regulation, or they didn't quite get this part or that part. And so the idea that we can reconceptualize banking, this is what Chris is doing. I mean, they're basically just going, look, man, we do everything a regular bank does. We have customers just like the next guy. We have the same capital issues. We have the same everything else, but we work off that extensibility in a serving way. We want to serve those clients so that they can in turn serve their clients. It's a foreign concept to regulators.
Yeah.
And they let it's let's send you out in the minefield until you blow your leg off, right? And it's like that's kind of the way it was. This is the comic part for me is you listen to them talk now, and it's like, well, this isn't just some trial by error, and we'll see as we go thing. And it's like
It was
bullshit.
for
That's
10
exactly
years.
what it was. That's exactly what it was for a long time. And they encouraged everybody to go out there and test and play with technology. And then they want to come back later and go, okay, let's rein this thing in and do it a different way. Me
Yeah.
and Tanner have talked a lot about that's actually a good thing in the evolutionary process. Now they've got a little catch up to do as well.
It's a good thing in the sense that I think it shows their commitment to this evolution and it shows maturity and that this evolution, we all could feel more confident in betting that this evolution is real. I wouldn't say, though, to your point, Dad, it's not like it's a good thing for all of us living in it. It's a freaking nightmare and a fiasco. Chris, of all people, right? I'm sure you're having a blast with it. It's not a fun time, but it should tell us that we're at the forefront of one hell of an evolution that they all believe to be true.
Yeah, I think
Otherwise,
that's
you'd see just tons of neobanks everywhere, and we
yeah,
don't.
that's right. That's right. And the horses are all out of the barn. The tidal wave is here. We're not holding it back. The question is, how do we change course? How do and there have been actors right out there, whether intentionally or unintentionally, who push the limits. And so, our message is let's not throw the baby out with the bathwater, right? Let's really try to understand how do we work together. So actually, Rohit Chopra, the director of the CFPB, was in Nashville on Friday. So he sat at the Tennessee Bankers Association hosted a conference, and so he and Greg Gonzalez, who is the Tennessee Banking Commissioner, is an amazing commissioner, just a great partner to banks in the state of Tennessee. They hosted a fireside chat, and then a couple of us met with them and with Director Chopra afterwards, and it was and so I said to him, I said, look, you're to be commended. I cannot tell you how much we appreciate the engagement. Right? Let's open this up. Let's everybody get some vulnerability on the table, and let's work through this together and work on a regulatory framework that isn't a gotcha framework, but is here's
Perfect.
compliance. Look, you guys are out of compliance, and now we've told you 3 times, and that's really a problem, right? Or over here, you guys are out of compliance. We know you want to do the right thing. We know you're trying to. Let's get it over here, right? Here's how we do it together. And it seems to me when you're on the frontier with things that are new and uncertain, that's one element of it. That's an important element. But at the end of the day, right, we all know, and that's why we chose to do this within a bank and not go start a fintech or not go start something else. And with Joe and our network, we certainly could have done that, but we wanted to work within the regulatory framework because we think it's critical. We think it's one of the things that has distinguished the US banking system from others and has created so many opportunities in our economy is that framework. And so that responsibility lies squarely on the banks. And any good banker knows that. Anyone who gets into this should be eyes wide open, and they understand that. So on one hand, perfection cannot be the expectation. That's never been the regulatory expectation, but responsibility and accountability has to be, the expectation. So that's where we are. We're always trying to find that balance, and we understand that the only way is through transparency, through communication, through raising your hand when you screw something up and, hey, we messed this up or we identified this, we're going to come back over here. But we are very concerned about the baby out with the bathwater, right? I mean, if everyone is a problem, then no one's a problem, and the market can't figure out who really is the problem and who isn't. So I would encourage and hopefully we've got some of our regulatory partners watching and listening, and that would be a message
Yeah,
I hope they would hear, right?
you
Is
can
that
bet your ass they're watching.
yeah, and
Yeah, we
that's
talk
that's
to
what
them a
we
lot.
that's
And
what we hope for because we think, I mean, they truly are partners. We've come into this at the beginning, and I think there are a lot of banks who have that view because this isn't going anywhere. This is where the partners are. Community banks are absolutely critical to our society, right? To our communities. Without them, communities shrivel up and die. And we want to show a way of how do we do this. And I think 3+ years, hopefully it doesn't take that long, but down the road here, this is going to be commonplace, right? It's going to be
it
just
is.
like many other, because this is the cycle. And so the banks all have to be patient, understand they are catching up in some regards, and there's a lot of work to do. And they've got a lot of other things to worry about too, right? They've got plenty of things to worry about that we need to have that. And so that's really where our mind is. How do we have a balance? And then we take the approach. There are absolutely uncertainties when you're in something that is new, and there aren't hundreds or thousands of other organizations doing things, in a lot of the ways that we're looking at them. So we have, first and foremost, our capital is at risk. Inside our boardroom, the vast majority of our capital is represented in our boardroom. And so we take very seriously that we are the first loss in any situation. And so I could cite for you, we have about 4 lines of defense that we build into our relationships that are all geared toward managing that risk and managing the capital risk of the bank. And if somehow all 4 of those lines of defense were to fail simultaneously, which would be, not that we don't want to say things can't happen, because then, that's when you get this statistical, yeah, you shouldn't have said that, buddy. But, it's a very difficult scenario to imagine multiple points of risk management to fail at the same time. But if they did, I'd like to point out, then we would be in the situation of the 99.9% of other community banks out there, that the bank's capital is not at risk. So we think about these things deeply, and are really geared everything toward risk management. Goes back to my beginnings, as a pilot. Inherently, it's not the safest thing in the world to do, right? To go and leave the ground and fly really fast in a small tin of metal. So it's all about understanding the risk, of preparation, studying what are the resources you have, and then you have to get comfortable that you understand the risks and have managed it better than otherwise people who aren't experts in that field would do. And then it's time to go take advantage of the inherent advantage you have by being able to fly in an airplane. Well, it's the same thing for us. We're very risk averse. And so we spend a lot of time trying to understand the risks and create structures. We're not perfect, right? Things are going to go haywire, but we layer on our risk management and structures. And, we think we've done a very good job of that. And we think that is kind of the pathway to working through and showing the regulators, showing the market, showing partners that you can do these things very much like a bank, responsibly so. And this hurricane will pass. And I think that the folks who have persevered and have done so with transparency will be in a really good spot. And hopefully we've learned a lot along the way that we can share with other folks.
So my grandmother, I remember, this is a long time ago. I was little, and she'd talk about, how she'd never fly, never get on an airplane, scared to death of it. And if we were meant to fly, we'd have wings. The Lord would have given us wings, right? And then you look today at where we're at with everything. And yeah, if you really want to be involved in business or even be a banker, you're going to fly. I mean, you want to have a fun vacation, you're going to fly. It's a more efficient way to get from point A to point B. Yeah. And that's actually what we're talking about here, is that, well, if we were meant to be bankers and, we should, okay, hang on, the rules have changed. And honestly, I go back to this moment where I think everybody's going to really sit down one day and go, the concept of opening an account without having to walk into the bank to do it was a game changer. And it's something that, yeah, I got that. And it's like, no, you don't got that. I'm telling you, we're going to be digesting that one for another decade, because of it changes everything as far as the risk for the bank. We don't know if that's a Casper the Friendly Ghost or if that's actually a real customer. 1033, are we going to shift these things over to FinTech? Or are we going to push them? Is it going to be good for banks or bad for banks? But I can tell you one thing that we all know is that, and you hit this perfectly, it's the concentration and the risk in the banking system is having all the money in 4 banks. That's a risk. And that we've already felt once before, and everybody seems to forget that. That is catastrophic risk and can cause a worldwide chain reaction. Community banks don't pose a risk to the worldwide financial system. But what they can do is allow companies that have a greater exposure than your local geography and you can make money off of those companies as well as serve them as your customer. So you actually got like a really cool business client that can actually bring their customer base in a revenue kind of way to you, even if they don't open an account. There's a lot of different things that they can do with cards and other programs rewards or different stuff that helps them serve their customers better. But in the end, if they're opening accounts and doing things through you, whether that be a loan or whether that be a deposit account, ultimately that serves your banking goals if it's done in a responsible and compliant way. And for the regulators it would have been great, y'all, if we could have just sat down and said, here's the rule book before we started. And now we're all trying to figure it out as we go to a certain extent. And I mean, golly, there's stuff I've learned a ton of things about, multi-state licenses and all this other kind of thing that, never really crossed my mind that much before because it wasn't much of an issue to cross your mind. And so we're all learning as we go here a little bit. I love your point, Chris, about, sitting down and communicating together, and this shouldn't be a gotcha.
Right.
But here's the unfortunate part because of, just not blaming a banker or not blaming a regulator, but blame everybody. And here's the deal. We've got to be able to push through this thing in a way that becomes really efficient. And what you're trying to do at your bank, hey man, hats off to you. You've done something smart. You've done something well. You've surrounded yourself with good people, and they've surrounded themselves with you, which I think is a great choice.
Well, no, thank you. It is, and it's the people, all the technology talk. It all goes back to everything. There's nothing new under the sun. What goes around comes around. All the principles that our fathers and grandfathers and great grandfathers and before them all knew are still in place. It is people, and we're fortunate we've been able to attract an incredible team to a small, up until a couple quarters ago, unprofitable bank. And so, we're very fortunate, and that's what makes it work today, and is going to make it work tomorrow, and make it work really well. So, we're weathering the hurricane. Hopefully, I like to say, it's a Cat 5 hurricane. You can only get so mad at the weather, and then you have to move on, and you have to accept it. Fortify your house. Hopefully, you only lose a couple shingles. If you lose the roof, that would stink, but you've got insurance for that too. So, I mean, the industry is going to get through this. I think we're going to be much better on the other side. I do believe the regulators are listening. It's a super tanker that takes a really long time to turn, especially when, they continue to get pop-up stress issues, and things, seemingly are rhyming when really they're not. Like, I mean, we're kind of the anti, not to pick on any banks that are no longer with us in previous form, but as of today, we've got single digit uninsured deposits as a part of our model, right? We're 99th percentile, and then everybody can go in the call reports and look at it. We're 99th percentile in terms of liquidity and how we did. And so we've turned our bank profitable, and with a really nice ramp toward very respectable and beyond bank profitability, all while keeping incredible liquidity and diversification, and showing a model. So I look at that and say, there's only one truth, and the truth is, this is where the market has to go by definition, and it's going there. And so people can either figure out whether they're banks, investors, regulators, FinTech companies, they can either get on board with that or not, and that's their choice.
Well said. I love it, man. I appreciate everything too. But I do want to give you just a couple of minutes, man. Anything on your mind whatsoever? Just final thoughts. It could be banking. It could be football. That was a good game, by the way. The overtime was.
Yeah. Tough.
But yeah,
Uh,
anything you want, man.
Yeah, I was a lifelong, growing up, rabid 49ers, Joe Montana fan.
All
Some
right.
things happened. Yeah, some things happened there in my mid-20s to kind of make me go, maybe I shouldn't be so into this pro football stuff. But now my middle son is a rabid Mahomes fan. So it was tough. It was a tough day in the house yesterday, that's for sure. And today, we're big Buckeyes fans, so no one likes us because of that. So,
That's great, man. But look, I got to tell you, we appreciate the hell out of you, and I mean your whole gang and everything you guys are doing, and also just being a good force in the industry. I think, look, I wouldn't accuse very many community bankers of being terribly selfish people, right? Everybody works together well, but you guys go above and beyond, right? For the whole ecosystem, you engage with the ecosystem, be that other community banks or vendors or friends like us. you really do a lot, and you're mindful and thoughtful of community banking as a whole. And I think you guys are pushing it forward, and it's super important. So thank you, thank you, thank you.
Well, no, thank you guys for what you do, and it's been great getting to know you over the last couple of years, and look forward to seeing how the next months and years go.
Having a ball, man. We're looking forward to it.
Hey, you coming to the roundup this year?
Yeah, we'll be there. I think we got the deconfliction done
Yes.
with the FinTech
Right,
stuff.
right.
Yeah.
I love it. Yeah, there's so many neat things that come from that. I could spend just hours talking about the crazy stuff on the side that we work on, connecting companies together and helping everybody. And this collaboration of thought and community and effort is really kind of happening at a different pace than it once was. I think everybody's now engaged, and you have so much to offer, and it's so good that you do that.
Yeah,
Righteous.
so looking forward to it. Yeah.
All right.
Thanks, Chris. See
All right,
ya.
we'll see you.